Inflation has been on the rise again in Britain, but does the economy need a rate cut? This is Macro Matters, and we're talking the UK economy. The Bank of England's Alan Taylor is calling on the Monetary Policy Committee to cut rates, even though consumer price inflation jumped to 3.5% in April. He says that was down to one-off changes, mostly in energy prices, and the uncertain global trade picture means Britain could do with a boost from cheaper borrowing. Governor Andrew Bailey said this week he intends to keep taking a gradual and careful approach. Well, Liz Martins is HSBC's senior UK economist. Liz, rates in Britain remain higher than many comparable economies. Do they need to come down sooner than the bank seems to be planning, do you think?
Oh, it's such a tricky question, and I think the split of opinions that you've just highlighted really reflects what a tough question that is. And if we think back to the May meeting, the split of the votes across the Monetary Policy Committee, we had two people, including Alan Taylor, who thought there should be a 50 basis point cut. We had two who thought there should be no cut at all. And of the five who thought there should be the quarter point that we actually got, three of those said, well, yes, but only probably because of the global tariff situation. So that split of opinions really illustrates, I think, what a tough question this is for the Bank of England as it tries to weigh up the risks to growth and employment versus the risks to lasting inflation. Now, from our perspective, we do think the Bank of England will continue to cut interest rates by a quarter point per quarter, as it has been doing, all the way down to what we think is the neutral rate of about 3%. But I have to say that ugly inflation number that we got in April and the noises coming out of the committee around that caution, apart from Alan Taylor, I think really speaks to the possibility of maybe a pause in the August meeting. And, actually you look at the market pricing now and it's only about 50-50, the expectation of whether we get a cut at all in August. And, that is understandable given the price and wage data we've seen.
You mentioned the global tariff confusion. The UK has, of course, struck a trade deal with the US, but how vulnerable is the wider economy to that tariff uncertainty?
Yeah, I think it is more the uncertainty perhaps than the direct trade impact. The UK economy is not dependent on goods exports to the US per se. So there is a small direct impact on some sectors and some companies, which will be painful. But the bigger picture is actually this big picture of uncertainty throughout the global economy. And does that derail what's actually been a decent start to the year for the UK? Actually, we had a really good GDP growth number for Q1 and a really good business investment number within that. So the big shock that we then got in April with all the tariff news and the uncertainty, which continues, of course, to this day, notwithstanding various reprieves and delays and things, is part of the risks to that. But it's not the only risk, because the UK, of course, we have our own problems. And one of the big things that comes up when we talk to our corporate customers is the tax rises that came through in April, the national insurance rise. And that, I think, is also weighing on business confidence and activity.
We have, of course, also seen continued rises in the yield of British gilts. How concerned is the market about the state of public sector finances?
Well, I think the market is concerned. I think, the UK is in a position where our debt levels are very high. As you mentioned, our interest rates are relatively high. So we're paying more, 3 to 4% of GDP every year just servicing that debt. And the worry is we get into this kind of poisonous cycle where the market worries about the state of the finances. In worrying, it sells off and then yields go higher. When yields go higher, the debt service spend increases and then the deficit increases as well. So, and add into that a very volatile global bond market situation. The market is worried about the US borrowing picture. So I think it's really tough for the Chancellor at the moment, which is why she's so concerned about getting economic growth, which might just get her out of it.
She has, of course, some very difficult choices to make in a spending review that's due on June the 11th. The IMF said the government should look at changing its fiscal rules, but should she, do you think, fear the bond markets?
Look, I think the bond market is highly influential in global policy making, isn't it? We saw it in October 2022 with the mini budget episode here. And I think, there is a limit to which the bond market will tolerate fiscal uncertainty and any any decline in credibility. So I think the Chancellor has made clear time and time again that she is going to stick with her fiscal rules, and I think the bond market expects that and would be very concerned if she didn't. So yeah, I do think she will, but that will remain a key focus, and the bond market will be looking for hints around this question when she delivers that spending review.
The government, as you said, is desperately searching for growth to improve those figures. Is there any positive signs in the data in recent months?
There is actually, yeah. So we had, I already mentioned the strong first quarter GDP growth. One area that seems to be improving is retail sales. Now, retail sales have been pretty weak for the last kind of 2 or 3 years, really, after a boom in the pandemic. And they've really been starting to recover for the first kind of few months of 2025. Obviously, April was difficult. We know about the high inflation, the tax rises, the tariffs, all of that. So we hope that the economy can continue to withstand, to see that positive momentum coming through in spite of all those headwinds that we saw in April. But yeah, there is a bit of better news out there, and the resilience of UK businesses, I think, is incredible to see, really, despite all the headwinds. They keep coming back and sentiment improves. So long may that continue.
That was Liz Martins of HSBC. Don't forget, you can watch more videos on Reuters.com.